Back to school is busy enough. The last thing you need is shopping that makes it harder. Whether you're moving into a dorm, your first apartment, or just getting organized for the semester, Wayfair makes it easy to get everything you need in one place. Furniture, bedding, storage, decor, study essentials, all at prices you'll love, with fast shipping before move-in day. Get everything you need for back-to-school season. Shop Wayfair.com today.
Wayfair, every style, every home.
Every successful business evolves. And to keep up, you need a bank relationship that evolves too. When you collaborate with KeyBank, you don't get one-size-fits-all solutions. Our expansive team of experts across industry verticals wouldn't be here if you did. Always ready with bespoke solutions for your biggest challenges and opportunities. We know all businesses are different, and that's why we approach business differently. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Thank you so much for tuning into Markets Radar. My name is Jeremy Quintanilla. This is a show about markets, stocks, bonds, foreign exchange, crypto, private, IPOs, and everything in between. And I give you my take on what I think that it all means. If you're new to this age of Jeremy feed, this is a feed all about my business adventures and side quests. Please make sure that you like and follow it. Send it to some people so we can get in front of some other folks as well. And I want to thank everybody that's been listening to this because over the past 2 months, we've increased the listenership on the Age of Jeremy feed by 200% from, June to July, and now July going into August. So I'm really excited about these numbers. So thank you guys so much. Again, this feed will eventually be going over to its own Markets Radar feed so that we can make room for more content on the Age of Jeremy feed. But again, we want to get this listener base going, want to see how many people are listening to this, and then getting everybody over to that once we get maybe a better intro or an intro made, I guess, because there's not one, and an exit for this show specifically. But again, my hope in this show is to get you more acclimated to marketplaces so that you can go and research things a little bit, maybe make some good investments. And again, you can follow me on Age of Jeremy for everything that I have going on. The Age of Jeremy Instagram feed and the Age of Jeremy feeds are all about everything that I'm doing within 3T Warrior Academy, within Blockheads, within Age of Radio, within Q Financial, within Freedom. Again, I am an entrepreneur, a multi-millionaire entrepreneur at that, and I'm very grateful for everybody that chooses to listen to me. And I'm going to continue to make more content, more educational content, so that you guys too can grow in your wealth year over year. But let's go ahead and get into some of the market news today. Now, most of these news articles I get from Bloomberg's. I also use Wall Street Journal, and I'm an advocate for people reading the news, spending time on the news, and understanding what is going on in the world. And I hope that if anything sparks your interest in here, you'll go get some news subscriptions from those outlets. I am not sponsored by them. Maybe one day we will be, but I'm a big advocate for finance journalism so that you guys don't get taken advantage of. I feel that we have gone backwards in the world, not listening to journalists, thinking that everything is trying to preach one way or preach another way, when what we should be doing is looking at the facts with as little opinion as possible, unless it is an opinion related piece or an opinion related show like this one. This is an opinion based on what I think is going on based off of these news articles. But again, I just encourage you guys to go and research more, learn more, and be better next year than you were this year. If you glanced at your screens yesterday, August 10th, this is being recorded on August 11th, you might have seen that Wall Street did a whole lot of waiting. There is CPI inflation information coming out later today, but let's look at the numbers of where they stood yesterday. The S&P 500 fell 0.2% as of 2:04 Eastern time. The NASDAQ 100 dropped 0.3%. The Dow Jones Industrial Average shed 0.2%. And the global MSCI World Index dipped 0.2%. Over on the bond side, yields eased slightly ahead of the inflation data. Treasury yields also eased slightly, with U.S. 10-year yields declining 2 basis points to 4.69%, Germany's to 3.16%, and Britain's to 4.96%. While stocks and bonds were in a holding pattern, the energy market was anything but quiet. Let's look at that first. U.S. crude rose 1.2% to settle at 83.14 cents a barrel as Iran reiterated plans to keep the Strait of Hormuz shut. But we saw an intense whipsaw. Earlier in the session, crude actually retreated after Pakistan signaled a potential deal, and Iranian officials hinted at progress with Oman, though a full reopening remains unclear. Adding to that specific friction, the gentleman that I think's a fucking idiot, Donald J. See, this is an opinion piece. And I reiterate, when I say things against Donald Trump, it's because I think he's a horrible human being. And again, you don't have to be an idiot to be wealthy, and or vice versa. And we should focus on increasing our intelligence in the United States rather than just our wallets. President Donald Trump toughened his stance, declaring Tehran must pay reparations for deaths and attacks linked to Iran and domestic protests, a direct response to Iran demanding compensation for U.S. interim deal violations. As Elias Haddad over at Brown Brothers Harriman put it, we see crude oil prices driving the war narrative, with price swings likely to dictate the pace of escalation and de-escalation. Jose Torres from Interactive Brokers added that investors have been awaiting a deal for weeks, and we're going to need tangible progress before yields fall significantly and stocks can rally further. Still, Jeffrey Roach from LPL Financial offered a reassuring reminder: the world has plenty of oil and the underlying economic conditions remain highly favorable for risk appetite once the geopolitical friction clears. The problem with this geopolitical friction, it was caused by Donald Trump and again, I'm sure that there's information that they have behind the scenes, that there's evidence for nuclear pieces. The problem is that nuclear energy is going to be one of the main things that moves the future forward. And so my position on it is, if you are good at statecraft and you are good at diplomacy, you should be working heavily with the Middle East countries to make sure that they can work on nuclear programs without providing the ability for them to make nuclear weaponry. And I think that we have failed at that. And I'm still unconvinced specifically that these other countries want to hurt any other country as of right now. But again, I'm basing this just off of mere understanding of the news information that's coming to me. But again, I think that this is a problem that was caused by Donald Trump, and it's going to be one of the biggest things that's going to hurt the Republicans going into the midterm elections here in the next couple of months. And it's going to be one of the biggest failures from the President Trump administration. So please, I don't even care if you vote for a Republican, vote non-MAGA and get these assholes out of the White House. So the CPI number is expected for today to show cooling energy pressures that spike after the war began. A soft print could ease anxiety at the Fed, where 3 officials dissented back in July in favor of raising rates. Dennis Fulmer of Montes Financial expects the downward trend to support a rate hold, despite last Friday's weak job reports. In other economic news, existing home sales fall to 3-month low in July, while small business optimism reached a newly 1-year high as inflation pressures eased. Small firms are ramping up hiring plans as those pressures back off. I do want to say that Berkshire Hathaway, I did add Berkshire Hathaway B and a few home ETFs to my portfolio, because I do believe that if Berkshire believes that there's going to be a long-term increase in the housing inside of the United States, that I want to be a part of it. And it might be that we can buy into some of these things at lower rates. But I do think that the housing market and the construction market is going to improve, as again, Berkshire Hathaway made a purchase of, I think it was Taylor Homes, if I'm not mistaken. I reported on it on Saturday. Let's go ahead and pivot to tech, with the AI landscape is witnessing some absolute monster numbers. Anthropic struck a massive $9.1 billion deal with Riot Platforms to secure their newly developed AI data center capacity. Meanwhile, Elon Musk's SpaceX AI is rolling out software for teams of AI agents to keep pace with Anthropic and OpenAI. In West Texas, Fermi Inc. signed a binding lease with TensorWave Inc. for its massive under-development data center campus. West Texas is fast becoming the next big frontier for raw computational power. On the downside, Swiss shoe brand On Holding AG posted disappointing Q2 sales after avoiding discounts in a highly promotional U.S. market. We also saw him in Hers Health report a Q2 loss that missed estimates as focusing on brand name weight loss drugs over cheaper copycats proved less profitable. In currencies, the Bloomberg Dollar Spot Index, Euro at 1.1537, British Pound at 1.3501, and Yen at 159.31 were all virtually unchanged. In the crypto space, Bitcoin fell 0.9% on Monday to trade around 63,000, hoping for a 62,000 buy-in for me to put more into that bad boy. And ETH slid 0.8% to 1,863. Finally, spot gold dropped 0.6% to settle at $4,365 an ounce. I started recently buying up silver and gold again as well. I took a hiatus over the last quarter just to let some of the numbers cool off, and I have began purchasing that again as well. We'll be right back.
Back to school is busy enough. The last thing you need is shopping that makes it harder. Whether you're moving into a dorm, your first apartment, or just getting organized for the semester, Wayfair makes it easy to get everything you need in one place. Furniture, bedding, storage, decor, study essentials, all at prices you'll love, with fast shipping before move-in day. Get everything you need for back-to-school season. Shop Wayfair.com today.
Wayfair, every style, every home.
Every successful business evolves. And to keep up, you need a bank relationship that evolves too. When you collaborate with KeyBank, you don't get one-size-fits-all solutions. Our expansive team of experts across industry verticals wouldn't be here if you did. Always ready with bespoke solutions for your biggest challenges and opportunities. We know all businesses are different, and that's why we approach business differently. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Right, let's zoom in on an absolute elephant in the tech sector. Nvidia, the chip giant, is making waves on two massive fronts: creative Wall Street financing and a big play in the open source AI war. First, let's talk about the mind-boggling money. Nvidia has been partnering with heavy hitters like Apollo, Blackstone, BlackRock, Brookfield, Goldman Sachs, and KKR to launch compute financing platforms. We're talking about deploying a staggering $500 billion in capital to help consumers pay for Nvidia's AI computing power. I do want to make it clear real quick, as I believe that sometimes our priorities are fucked, is that it only costs about $7 billion to $10 billion a year to feed the entire, either the planet or the US. Either way, we could help a lot of people. Instead, we're putting $500 billion fucking dollars into AI computing power. And I don't know if that's really going to help the small man in the future. I don't know how it's going to take jobs from blue collars. Maybe it's going to take jobs from white collars, especially. I did a whole legal report with just me and Claude, came out perfect. Didn't need to hire a law firm. So hopefully lawyers are going to go extinct. Actually, I do like my lawyers. Law. Now, when news of this first broke about the $5 billion capital to help pay for Nvidia's AI computing power, bond traders had a mini panic. Wall Street was worried about circular agreements, where Nvidia helps fund the companies buying its own chips, fanning fears of a debt-fueled bubble. Bond yields and credit default swaps spiked. But today, CEO Jensen Huang came to the rescue. He hopped on X, I guess X is really the town square, to clarify that Nvidia's actual support is limited to up to 25% of an opportunity, assessed carefully on a project-by-project basis, designed to complement independent underwriting rather than take on the full risk. That simple clarification completely calmed the markets. Again, you can, make waves in the markets by jumping on X and having a giant following. So we live in a real fun, volatile world there. The simple clarification completely calmed the markets. Credit default swaps narrowed and yields on Nvidia 2056 bonds slipped back down. Crisis averted and the $500 billion train keeps rolling. And who knows if Wang was lying? I mean, you could just go on there and say whatever the fuck you want. That's what Elon Musk does. And that moves markets. But the news doesn't stop with high finance. Nvidia is also making a major statement in the great open versus closed AI debate. Today, they released a brand new open source model called Nemotron 3.5 Lightning. Think of Lightning as a distilled AI. It packs the knowledge of massive power-hungry models into a much smaller, highly efficient package. Why does that matter? Well, tokens cost, as I know, because I keep running out of my Fable 5 tokens on Claude. And now when I go to Claude and I up the coins, it says, do you want us to re-upload whenever you reach a certain amount of tokens? So essentially, you can start a subscription business on the subscription business being the tokens automatically re-upping as you run out of them. Running huge AI models day in and day out is incredibly expensive for enterprises. Almost makes you wonder if they should just hire people. Lightning helps keep those costs on a leash, along with so essentially it's using AI to keep the AI under control vis-a-vis the computing power. Along with Lightning, Nvidia dropped an open source model routing library called Nemo Switchyard. Think of Switchyard as a smart traffic cop for AI. Instead of sending every simple routine task to a massive expensive model, Switchyard automatically balances cost, quality, and latency, routing simpler tasks to smaller models like Lightning. But here's an even bigger reason enterprises are drooling over this. I don't have a drooling sound, but I have this cash sound. I don't know if that's going to resonate with people, but oh well. There's even a bigger reason enterprises are over this, protecting their intellectual property. If you're a company in a specialized domain like cybersecurity or material science, the last thing you want is to feed your proprietary secrets into a closed AI provider who might end up competing in your market tomorrow. Open models like Nemotron 3.5 Lightning let these companies self-train and run the AI locally, keeping their crown jewels safe. Between a $500 billion financing machine and democratizing cost-efficient AI, Nvidia is proving once again that they are just selling shovels in the gold rush. They are building that they aren't just selling shovels in the gold rush. They are building the entire mining frickin' town.
Back to school is busy enough. The last thing you need is shopping that makes it harder. Whether you're moving into a dorm, your first apartment, or just getting organized for the semester, Wayfair makes it easy to get everything you need in one place. Furniture, bedding, storage, decor, study essentials, all at prices you'll love, with fast shipping before move-in day. Get everything you need for back-to-school season. Shop Wayfair.com today.
Wayfair, every style, every home.
Every successful business evolves. And to keep up, you need a bank relationship that evolves too. When you collaborate with KeyBank, you don't get one-size-fits-all solutions. Our expansive team of experts across industry verticals wouldn't be here if you did. Always ready with bespoke solutions for your biggest challenges and opportunities. We know all businesses are different, and that's why we approach business differently. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
We always like to keep crypto markets in the, market space because I have Merlin, the smartest way to track your crypto. And so I want to talk about some changes in Wintermute and what Wintermute is, because I had not heard of them really before I started doing research on what was happening in the crypto markets today. But before we do that, I want to ask you, are you tired of jumping between different exchanges and wallets just to keep track of your crypto? Well, Merlin is the smartest crypto tracker on the market. Merlin consolidates your entire crypto portfolio into one powerful dashboard, letting you track your performance at a glance and build custom entry and exit strategies. No more guesswork, just secure SOC 2 certified tracking and real-time alerts that moment your assets hit what we call your exit targets, because you want to make sure that you're taking profit on the way up. So you take that profit, and if you follow our Capital DR system in the 3-2 Warrior Academy, you'll put that money into other assets that we call protection that you can leverage later to do something else with. But again, Merlin helps you track smarter and plan your profit. Head on over to merlin.com and get 30 days entirely free on us. So I'm going to take a look at Wintermute. I called it Wintermule, so they probably hate me for that. Wintermute, one of the absolute titans of the digital asset space, and I had never even heard of them. But again, I don't spend all of my time just looking at crypto. Or do I? You'll never know. But Wintermute, being a titan in the digital asset space, they have making a bold step directly onto regulated Wall Street. Now, if you're not familiar with Wintermute, as I wasn't, let's establish some context for myself and for you. Founded in 2017 by Evgeny Gavoy, a former trader at the elite high-frequency trading firm act.Oh, Wintermute has grown into an absolute juggernaut. We are talking about a firm that processed a massive three-profit $5 trillion in total trading volume last year. They averaged a staggering $10 billion in daily trading volume, operating across more than 60 different venues, ranging from traditional institutions like the Chicago Mercantile Exchange, all the way to decentralized crypto protocols like Uniswap. Essentially, if there's a digital asset moving anywhere in the world, there's a very good chance that Wintermute is on the other side of that trade, providing liquidity and keeping markets running. But here's the headline of what's going on today. Wintermute's US arm, Wintermute USA, has officially registered as a broker-dealer with FINRA, bringing themselves squarely under the watchful eye of the Securities and Exchange Commission. This isn't just a minor regulatory checkmark. This is a massive strategic bridge between the wild world of decentralized finance and highly regulated corridors of traditional Wall Street. By securing a broker-dealer license, Wintermute is now eligible to become a designated market maker or major public stock exchanges. A market maker on major public stock exchanges, including, as you guessed it, the big ones, New York Stock Exchange and the NASDAQ. A company born and bred in the high-frequency trenches of crypto is positioning itself to be the key intermediary, continuously buying and selling traditional stocks, ensuring that everyday investors can trade instantly. It is a complete role reversal where the crypto disruptors are becoming the core infrastructure of the traditional stock exchanges they once bypassed. I'm going to say that again. If you were out on cryptocurrency and blockchain technology, this is what we have been trying to tell you in the Academy and what I've been trying to tell you here, that crypto is disrupting the financial infrastructure space. And this is going to bring crypto infrastructure to become liquidity for the New York Stock Exchange and the NASDAQ. According to CEO Evgeny Gavoy, it is also about being prepared for, in his words, all possible futures. The broker-dealer license unlocks massive new opportunities. Wintermute plans to start trading crypto-adjacent products, including commodities and digital asset exchange-traded funds, or ETFs. And if U.S. regulations ever green-light tokenized stocks, Wintermute will be standing right at the front of the line, ready to dominate. In fact, they are already flexing their commodities muscles. Just recently, Wintermute Asia launched crude oil CFDs to the OTC desk, offering institutional clients 24/7 exposure to WTI crude with zero fee execution and flexible collateral. They are proving that traditional assets can be traded with the round-the-clock efficiency of crypto. But here is the most audacious part of their plan. Wintermute isn't just looking to participate on Wall Street, they are looking to conquer it. Gavoy has openly stated that within 3 to 5 years, Wintermute USA aims to go toe-to-toe and rival the undisputed heavyweights of traditional market making. We are talking about Jump Trading, Jane Street, and Citadel Securities. Now, this move is part of a much broader, highly calculable trend. And we've been in a nearly a year-long crypto slump that has damaged digital asset prices and cooled retail enthusiasm. To make matters trickier, major U.S. legislation like the Clarity Act, which would establish the first comprehensive regulatory framework of digital assets, remains stalled in Congress because who knows what they're doing in Congress. So what is a smart crypto firm to do? They diversify. Wintermute is joining a wave of crypto-centric companies expanding into traditional finances like equities, trading, and wealth management to insulate themselves from the brutal volatility of crypto winters. We've seen Ripple shell out $1.25 billion to acquire prime broker Hidden Road, crypto market maker GSR, buy up Equilibrium Capital Services, and Crypto.com acquire Watchdog Capital. Wintermute's registration as a broker-dealer is a clear signal that the boundary between crypto and traditional finance is dissolving. The big crypto players aren't waiting around for the regulations to build a bridge. They are buying, registering, and building their own ways into Wall Street. And that is the deep dive on Wintermute's big Wall Street bet. Keep your eyes on this space because the battle for market making dominance between the old guard and the crypto natives is about to get very interesting, and it isn't going away.
Back to school is busy enough. The last thing you need is shopping that makes it harder. Whether you're moving into a dorm, your first apartment, or just getting organized for the semester, Wayfair makes it easy to get everything you need in one place. Furniture, bedding, storage, decor, study essentials, all at prices you'll love, with fast shipping before move-in day. Get everything you need for back-to-school season. Shop wayfair.com today.
Wayfair, every style, every home.
Every successful business evolves. And to keep up, you need a bank relationship that evolves too. When you collaborate with KeyBank, you don't get one-size-fits-all solutions. Our expansive team of experts across industry verticals wouldn't be here if you did. Always ready with bespoke solutions for your biggest challenges and opportunities. We know all businesses are different, and that's why we approach business differently. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Let's wrap up today's market radar with a quick trip to the Alps, because we need to talk about an economy that is defying the gravity pulling down the rest of Europe. We are talking about Switzerland, the Swiss Alps, Switzerland boarding schools, which is where I'm going to send my daughter to if I have one and she grows up. As long as she makes it, that's where she's going. Switzerland, which has managed to pull off a remarkable trick, watching its inflation rate fall even as the rest of the continent battles a massive energy crunch. On Monday, August 10th, the Swiss Federal Statistics Office announced that the country's annual inflation rate fell to just 0.4% in July, down from 0.5% in June. This is the lowest inflation reading Switzerland has had since March, driven by drops in prices for air transportation, diesel, and petrol. Now, if you've been following the global markets, you know this is a total anomaly. Just last week, the Eurozone data showed inflation there heading in the exact opposite direction, rebounding in July as energy costs surged on the back of rising military tensions between the US and Iran in the Middle East. Which brings us to the big question of the day. How on earth is Switzerland pulling this off? Let's do a little sound effect that's not relevant to anything. One more. Insulated from the energy shocks rocking their neighbors, and what does it mean for the Swiss National Bank? To answer that, we have to look at the two unique Swiss advantages, their energy grid and their currency. First, the energy mix. Unlike Germany or other Eurozone neighbors, they rely heavily on imported gas and oil. Switzerland has a highly diversified and domestic power supply. They run largely on hydroelectric dams and nuclear power. What did I say? They largely run on hydroelectric dams. And what was the other one? Nuclear power. This shields their domestic electricity prices from the swings in global oil and gas markets because they're smart. Second, we have to talk about the Swiss franc. In times of geopolitical chaos, the franc, like the recent military strikes in the Middle East, global investors run to safe havens. And there is no safe haven quite like the Swiss franc, where the franc appreciates. It makes importing goods and services much cheaper, essentially exporting inflation out of the country and keeping local consumer prices flat. But the strong franc is a double-edged sword. It hurts Swiss exporters because it makes their goods more expensive abroad. That is why the Swiss National Bank chairman, Martin Schlegel, has warned that the central bank is highly willing to intervene in the foreign exchange market if the franc gets too strong. In fact, we did see the franc weaken recently after Schlegel's comments and as interest rate hike from the European Central Bank, which gave Swiss exporters some breathing room. So what is the game plan for the Swiss National Bank going forward? Well, despite inflation jumping from near zero earlier this year to a peak of 0.6% in April and May, it remains comfortably within the SNB's target zone of 0 to 2%. Analysts at Pantheon Macroeconomics expect that inflation will hold well below 1.0%, all the way through 2027. This leaves Swiss policymakers in an incredibly comfortable position, which means that maybe it's time to buy some ETFs in Switzerland. But that's just my opinion. I'll look into that later and give you updates if I decide to do that. They have inflation under tight control, and their economic growth hasn't been derailed by the energy crisis because they have diversified their fucking energy. They've diversified their fucking energy. I don't know if that blocked me out or not. We'll have to listen to it in post. Because of this, expectation is that the S&P will keep interest rates on hold at 0% for the rest of the year. It's a masterclass in economic resilience and a reminder that sometimes having a safe haven currency and a domestic grid is the best insurance policy money can buy. And that wraps up Markets Radar for today. Again, my name is Jeremy Quintanilla. Like this, subscribe to it, share it with a friend, get them involved with markets, get yourself involved with investing, get yourself involved with reading. Follow me at Age of Jeremy on all social media platforms. And as I always say, be thankful, grateful, and kind, and we'll talk with you soon. Bye.